Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 13th. Hope you guys having a great morning thus far. We just got a couple items here on the economic calendar. We'll start off with, of course, what we get every Thursday is the weekly jobless claims here. So last week we had 233 people apply for estimate of 233,000 people apply for unemployment for benefits. Forecast for this week was supposed to have a slight decrease to 226,000. Instead of being a slight, it was actually a pretty sharp drop to 206. So this is something definitely want to keep an eye on. We were seeing it gradually increase over the last month and a half, and now so we get this big sharp drop. So let's keep an eye on this to see if this is a new trend or maybe it's just a blip on the radar, so to speak here. But either way, it's a good news that we had less people obviously applying for unemployment, especially here during the holiday season here. Last but not least, we got the import price index for the month of November. So in October, we had a 0.5% increase in import prices. However, we had the opposite in November. It dropped 1.6%. And oil kind of led that. So if you recall, in oil, in October, it was up to around 80 some dollars per barrel. And then November, it dipped down to about $50 per barrel. So it had a pretty big drop, sharp decline. And this is what helps reduce this index here, index here, import price index. So let's kind of jump ahead here to the headline news. Stock market's a little mixed. We had early on, all three indexes were in positive territory over the last hour. I've kind of seen the S&P kind of dip its toes into negative back into positive. So it's kind of in that teetering position there. NASDAQ is crossed over to the negative territory. It's just barely under there, but still there as I'm doing this recording. We did get some news from the ECB today, confirming that they are going to end their purchase program on asset purchase program in December. They won't be buying any more bonds at that point. So what this kind of means in the meantime, as I do these videos, we're talking mostly about interest rates. And so when there's less appetite for bonds out there, that means basically bond prices start rising up because of lack of demand, and therefore rates start climbing as well. So we got to be careful. I'm sorry, prices start dropping. Excuse me. Prices start dropping. It's the reverse of that. So prices start dropping, and then interest rates start rising. So when we have less demand on our mortgage-backed securities or bonds, those rates start climbing here. But they're kind of looking like what what our Fed did a few years back. They stopped their purchase program, and then they were reinvesting into what was when they matured, the bonds matured, they would reinvest those funds back into the same thing, so they keep the same balance sheet. Since then, a year ago, we are now tapering off on that, so we're trying to basically unload that that balance sheet of what they currently hold. Whereas on the Europe ECB, they noticed some soft spots over there, so they're going to continue kind of like what we did with the. So when they mature, they're going to keep reinvesting into those for the time being. And then you may see at some point going ahead them dropping down. But they have a much greater balance sheet than what our Fed had carried. So it'll be interesting to see how they handle that up in the upcoming years, and hopefully when the economy improves enough for them to be able to taper to do so. Also, of course, they're still looking at the big thing is, of course, they're kind of still looking at the China and U.S. trade agreements. So they're kind of looking into it. It's looking pretty positive. They're seeing some China making some huge sacrifices that they're going to kind of pull back on their Made in China 2025 plan. And basically, they're kind of now issuing those orders over to the city-states and kind of informing them to kind of pull back a bit on that. So we're seeing them actually putting that into action. So people are feeling a lot more optimistic about something maybe getting done between the U.S. and China. So that's good news for all. Let's kind of jump ahead here, see how this is affecting the bond market. Bond market is not doing too bad. We've seen this last couple of days, we've kind of been dipping down. We got this floor of support, as I mentioned. This is a double layer here, so it should be a pretty strong one. We kind of touched off it yesterday. We're up a little bit from yesterday. We're currently up about 6 basis points. We're starting to get this star effect, so it's kind of trying to decide which way to go. But currently we're up about 6 basis points from where we left off yesterday. So here's where we left off yesterday. We're kind of up at this level right now. Not enough for really any price changes, not really any price improvements, but it's it could possibly again, give us a little shift here where mortgage-backed securities are. And the Treasury, same thing. Treasury is up to about 2.91. We're seeing that level right now, so Treasuries went up a little bit. And as you can see, we had this little bit of a crossover here, kind of bringing it back into neutral territory. Right now it's in the middle level, so it could go one way or the other way, either direction, and it could be some pretty big swings that could affect mortgage-backed securities and interest rates. So again, if you guys are floating out there or in any transaction where you want to have that finger on the lock button just in case if anything pops up. Otherwise, yeah, go ahead and continue to float. But in the meantime, just be cautious and be alert to float or lock when you need to. All right, so that pretty much wraps things up. If anything else pops up, I will post on Twitter as I usually do every day. You can find me at Mike Bjork. You can follow me there and get the latest updates on the market and other real estate related items. You guys have a great rest of your day. Thanks so much for watching. I'll see you guys tomorrow. Bye-bye.